Monetary Union and Financial Services Eurozone, Economic and Monetary Union of the European Union, Banking Union, Euro Stocks 50, and Eurozone. The creation of a European single currency became an official objective of the European Economic Community in 1969. In 1992, having negotiated the structure and procedures of the currency union, the member states signed the Maastricht Treaty and were legally bound to fulfill the agreed-on rules, including the convergence criteria, if they wanted to join the monetary union. The states wanting to participate had first to join the European exchange rate mechanism. In 1999, the currency union started first as an accounting currency, with 11 member states joining. In 2002, the currency was fully put into place when euro notes and coins were issued and national currencies began to phase out in the Eurozone, which by then consisted of 12 member states. The Eurozone, constituted by the EU member states, which have adopted the euro, has since grown to 19 countries. The euro was introduced in 2002, replacing 12 national currencies. 7 countries have since joined. The euro and the monetary policies of those who have adopted it in agreement with the EU are under the control of the European Central Bank, ECB. The ECB is the central bank for the Eurozone and thus controls monetary policy in that area with an agenda to maintain price stability. It is at the center of the European system of central banks, which comprehends all EU national central banks and is controlled by its General Council, consisting of the President of the ECB, who is appointed by the European Council, the Vice President of the ECB, and the governors of the national central banks of all 27 EU member states. The European System of Financial Supervision is an institutional architecture of the EU's framework of financial supervision, composed by 3 authorities: the European Banking Authority, the European Insurance and Occupational Pensions Authority, and the European Securities and Markets Authority. To complement this framework, there is also a European Systemic Risk Board under the responsibility of the central bank. The aim of this financial control system is to ensure the economic stability of the EU. To prevent the joining states from getting into financial trouble or crisis after entering the monetary union, they were obliged in the Maastricht Treaty to fulfill important financial obligations and procedures, especially to show budgetary discipline and a high degree of sustainable economic convergence, as well as to avoid excessive government deficits and limit the government debt to a sustainable level. Industry and digital economy. The European Commission working sectors are aeronautics, automotive, biotechnology, chemicals, construction, cosmetics, defense, electronics, firearms, food and drink, gambling, healthcare, maritime, mechanics, medical, postal, raw materials, space, textile, tourism, toys and social economy. Societas Cooperativa Europaea. Energy policy of the European Union. Consumed energy 2012. Energy source origin % oil, imported 33%, domestic 6% gas, imported 14%, domestic 9% nuclear, and imported 0% domestic 13% coal/lignite, imported 0% domestic 10% renewable, imported 0% domestic 7% other, imported 7% domestic 1% in 2006. The EU 27 had a gross inland energy consumption of 1,825 million tons of oil equivalent. Around 46% of the energy consumed was produced within the member states, while 54% was imported. In these statistics, nuclear energy is treated as primary energy, produced in the EU, regardless of the source of the uranium, of which less than 3% is produced in the EU. The EU has had legislative power in the area of energy policy for most of its existence. This has its roots in the original European coal and steel community. The introduction of a mandatory and comprehensive European energy policy was approved at the meeting of the European Council in October 2005, and the first draft policy was published in January 2007. In 2020, renewables overtook fossil fuels as the European Union's main source of electricity for the first time. The EU has 5 key points in its energy policy: increase competition in the internal market, encourage investment and boost interconnections between electricity grids, diversify energy resources with better systems to respond to a crisis, establish a new treaty framework for energy cooperation with Russia while improving relations with energy-rich states in Central Asia and North Africa, use existing energy supplies more efficiently while increasing renewable energy commercialization, and finally increase funding for new energy technologies. In 2007, EU countries as a whole imported 82% of their oil, 57% of their natural gas and 97.48% of their uranium demands. The 3 largest suppliers of natural gas to the European Union are Russia, Norway and Algeria, that amounted for about 3/4 of the imports in 2019. There is a strong dependence on Russian energy that the EU has been attempting to reduce. However, in May 2022, it was reported that the European Union is preparing another sanction against Russia over its invasion of Ukraine. It is expected to target Russian oil, Russian and Belarusian banks, as well as individuals and companies. According to an article by Reuters, 2 diplomats stated that the European Union may impose a ban on imports of Russian oil by the end of 2022. In May 2022, the EU Commission published the REPower Initiative, a $300 billion plan outlining the path towards the end of EU dependence on Russian fossil fuels by 2030 and the acceleration on the clean energy transition. Infrastructure Transport in the European Union European Commissioner for Transport. The Øresund Bridge between Denmark and Sweden is part of the Trans-European networks. The European Union is working to improve cross-border infrastructure, for example, through the Trans-European networks, TEN. Projects under TEN include the Channel Tunnel, LGV Est, the FR-Just Rail Tunnel, the Øresund Bridge, the Brenner Base Tunnel and the Strait of Messina Bridge. In 2010, the estimated network covers 75,200 kilometers, 46,700 miles of roads, 78,000 kilometers, 48,000 miles of railways, 330 airports, 270 maritime harbors, and 210 internal harbors. Rail transport in Europe is being synchronized with the European Rail Traffic Management System, ERTMS, an initiative to greatly enhance safety, increase efficiency of trains and enhance cross-border interoperability of rail transport in Europe by replacing signaling equipment with digitized mostly wireless versions and by creating a single Europe-wide standard for train control and command systems. The developing European transport policies will increase the pressure on the environment in many regions by the increased transport network. In the pre-2004 EU members, the major problem in transport deals with congestion and pollution. After the recent enlargement, the new states that joined since 2004 added the problem of solving accessibility to the transport agenda. The Polish road network was upgraded such as the A4 Autostrada. Telecommunications and Space European Union Roaming Regulations, European Space Agency and European Union Agency for the Space Program, European Space Agency Mission Control at ESOC in Darmstadt, Germany. Mobile communication roaming charges are abolished throughout the EU, Iceland, Liechtenstein and Norway. The Galileo positioning system is an EU infrastructure project. Galileo is a proposed satellite navigation system to be built by the EU and launched by the European Space Agency, ESA. The Galileo project was launched partly to reduce the EU's dependency on the US-operated global positioning system, but also to give more complete global coverage and allow for greater accuracy, given the aged nature of the GPS system.